Interest rates are high, yet gold prices are rising. Many people think this should not happen, but the truth is, gold is not reacting to interest rates the way most people believe. Today we will understand this clearly, step by step, using real economics, not confusion. Welcome to Gyan in English. My name is Brijesh. In this video, you will understand how interest rates really affect gold, why gold can rise even when rates are high, why gold often moves before rate cuts, and how gold is different from silver, copper, platinum, and palladium. Let's start from the basic. So, the chapter 1 is interest rates and gold. In this chapter, we will understand how interest rates affect gold prices and why higher interest rates usually create pressure on gold. Gold does not pay interest, so when interest rates rise, bank deposits and bonds become more attractive. For example, if a bank deposit pays 6% interest and gold pays 0%, many investors prefer the deposit. Because of this, money moves away from gold. Gold prices often face pressure. This relationship is real and well known. So now we understand the basic relationship between interest rate and gold. But this is not the full story because interest rates alone do not decide gold prices. Chapter 2 is real interest rates. In this chapter, we will understand real interest rates and why real return matters more than headline interest rates. What matter is real interest rate? Real interest rate equal interest rate minus inflation. For example, interest rate equals 6%, inflation equals 7%. Real return is negative. So the real return is negative, which is minus 1%. So even with high interest rates, purchasing power is falling, money is losing value in real terms. In such situations, gold becomes attractive as a store of value. This is why gold can rise even when interest rates are high. I hope this example makes sense. In the next chapter, we will understand why gold often moves before rate cuts actually happens. Chapter 3, why gold moves before rate cut. In this chapter, we will understand how market price future rate cuts in advance and why gold often moves before official announcement. Markets are forward looking. Investors do not wait for announcement from central banks like the Federal Reserve. For example, if investors see economic growth slowing, inflation cooling, debt pressure increasing, they expect interest rates may be cut in the future, so they buy gold early, push prices before rate cuts happen. That's why gold often rises while interest rates are still high. Now we understand gold's timing. Next, let's see why gold behave very differently from other metals. Gold versus other metals. In this chapter, we will understand why gold behave differently from silver, copper, platinum, and palladium. Gold is a monetary metal, store of value, reflects confidence in money, responds to real rates and uncertainty. Silver has two roles, monetary metal and industrial metal. For example, during recession, silver falls more than gold. During recovery, silver rises faster than gold. That's why silver is more volatile. Next is copper. Copper is an industrial metal. For example, if construction and manufacturing slow, copper demand falls, prices falls. Copper reflects economic activity, not fear. Next one is platinum.
Platinum, a critical metal, is consumed in the auto industry to create catalytic converters.
Platinum depends mainly on auto demand, industrial use. It does not behave like gold. Palladium. Palladium is a highly dependent on gasoline vehicle. Very volatile, not a safe haven asset. This difference between metal is extremely important. Now let's bring everything together. Now let's focus on the most important insight from this entire discussion. Gold is not about earning returns. Gold is about protecting purchasing power and confidence in money. Industrial metals depend on economic demand. Gold depends on trust. If you understand this difference, metal will stop feeling confusing. Before we end, here is the main takeaway you should remember. Gold often rises before rate cuts, not after, and not all metal follow the same rules. I hope this explanation was clear and helpful. If it added value, like and share the video. If you have any doubt, write them in the comment. I'll try to reply or make a separate explanatory video. You can also suggest topic you want me to cover. And if you enjoy simple, fact-based explanation like this, consider subscribing to the channel. I'll see you in the next one. Thank you.